So it is really unlikely that alone the European market is going to hold while the others are correcting.
So Bruno, it's your first time back in the studios in 2017. So you wanted to talk about what had changed since December and also talk us through what we're going to start with first of all.
Yes, good morning, Jessica. Happy New Year. We want to start with this US interest rates, the 10-year. We remember November was a big rise from 170 up to 262, and in December there was a pause during the holiday season with a decline from 260 toward 230. Basically, the uptrend is still intact. We are still above the cloud, so the downside is probably limited to 230%. But we should probably expect, like here on the red arrows, more sideways range for a few weeks before really the uptrend resumes.
And has this influenced the US financial sector at all?
It influenced directly the US financial sectors. Clearly, we see that during the rise in rates, the uptrend was very strong for financial sectors, with a relative strength rising very much. In December already it flattened out. Relative strength was also flat, and now it's kind of threatening a little bit some of the supports. The momentum is turning down, some divergence on the MACD. That implies that we could have a correction towards 50% of this up move.
And another bull trend that we did see was oil. So is this still rising as well?
Well, oil, we had a high expectation. We had a big pattern, and we expected to rise it once above 50 towards 65. We are a little bit disappointed somehow. We see that in January, the price of oil failed at 55 and started to slide slowly back below 52, which is the former resistance which broke in October and gave a bullish signal. Momentum is down, so we should expect probably a correction going all the way to 47. So here a little bit of a slowdown and disappointment.
And in light of this, is US oil also weaker?
Yeah, the oil sector, of course, energy sector in the US has also behaved about the same. We see relative strength was moving up, and now since December, as the price stalled, it's going sideways, and recently with the price decline below 52, it's starting to break some of this rising trend line, and the momentum is a little bit on the way down. So here, energy is not going to help the S&P.
And one sector that has been performing well is the technology sector. So are you expecting this to stop anytime soon?
Well, technology sector was doing something good. Since December, it had been rebounding versus the S&P 500, so it was helping the uptrend of the S&P. Here we make a new highs, but it's not too clear if it's going to accelerate on the upside. There are some signs that it is a little bit overbought, and so it could more likely go sideways. So this sector also is not going to help a lot.
And all of these sectors do seem to be calling for caution. So how is the global index doing?
Yes, here we have the S&P 500, and we remember that from November, where the VIX was very high, the VIX has been declining, meaning the people were more bullish, the market. The overall market has moved quite a lot, all the way to 2277, even made a new marginal high at 2282 on the first week of January. But here, the momentum is overbought, and with all what we have seen inside the big S&P market, what we probably are going to get is having a cap around 2280 on the S&P and moving sideways probably toward 2240 in the coming weeks.
And is this situation also similar for Japan?
Well, the problem is that this situation looks alike almost in all countries. We see Nikkei was doing a bit better than the S&P, rising relative strength here on the dotted line. The yen was declining, now it's flat. That doesn't get much support from there. And also the price, even it's a new high, it's pulled back. So it's likely along this small bearish divergence here that we enter again this sideways range and we break along the direction of this arrow here.
And talk us through the situation in Europe at the moment.
Europe was interesting. Look at Europe relative strength versus the S&P 500. It was rising during all months of December. So we're thinking that maybe something new or different could be happening and that the uptrend could extend. In January, it's stalling. It's flattening out the relative strength, and here, even though it doesn't move a lot, it stays sideways. So it is really unlikely that alone the European market is going to hold while the others are correcting. And we see the momentum also slowing down there, right?
And finally, Bruno, can you talk us through what's happening with the emerging markets?
Emerging markets have been influenced quite a lot, let's look at China, by the rising interest rates. They are very sensitive to that rising rates in the US. So already in October, November, the relative strength that we are here in the black line was coming down. Fortunately, as rates started to stabilize a little bit, relative strength rebounded here for the emerging market. That means the emerging market of China here was able to catch back to the highs, but we see these highs are descending highs along this dotted line and close to this trend line now. It's possible that we are going to stall, and we see the similar situation for Brazil. A rebound also during the same period in the last 2 weeks, rising relative strength, but it's coming close to some big resistances here. And so here we need to be a little bit careful and realize in conclusion that even though this first week was up, it could be a bear trap.
Fantastic. Well, Bruno, thank you so much for coming in once again and sharing your insights with us.
You're welcome.
Well, that's all from myself, and Bruno will be back again in 2 weeks' time, so see you then.